Welcome back. As we announced last week, Costco is Yahoo Finance's best company of the year. But what about our worst company of the year? To discuss, we're joined by senior columnist Rick Newman and senior autos reporter Pras Subramanian. I guess the beans have been spilled here, so I can just let it out of the bag. Actually, I'm letting
Tell everyone.
Tell everyone.
They want to know.
Yeah, the worst company of the year is Carvana. Just look at the numbers with Carvana. I mean, the stock is down, I think, 97%. It's lost about the same amount in terms of value. There are some questions about whether it's going to have enough liquidity to keep going. Speculation about a possible Chapter 11 filing some point in 2023. And the interesting thing about Carvana, guys, is it's actually a pretty cool concept. It's not like...
We've seen the vending machines.
I mean, it's not like this is a terrible idea. I mean, it's actually a really good idea. Find a better way to sell people used cars because just about everybody hates going to a used car dealership, and this... they're trying to be, sort of like the Airbnb or the Uber of used car buying. So they just got it over their skis in 2022. They did not cut back when they should have. They did not see the turn in the market coming as interest rates went up. And then they made a big acquisition that they took on a lot of debt to do, and that just has created cash flow problems for them. So they're trying to work their way out of it. They did say to us, look, a lot of disruptive companies have struggled in their early years and then gone on to become market leaders, and they say that's what we intend to do. We'll find out in 2023.
We'll see how they're going to get there. Pras, what do you make of this just in terms of the challenges that Carvana is presented with? A lot of them, you could argue, clearly self-inflicted. Rick just talking about that $2 billion acquisition that they made not too long ago. But what did we learn just about the online car buying model? Is that something that we should be worried about here for the future? Because it does make things a lot simpler.
Yeah, I mean, it is a popular service. I think Progressive did a survey, and they said 80% nearly of people said they had a highly pleasant experience buying a car online. And I think that it works for people that are Gen Z, Gen Y, people who are used to working online. I know women in particular like not dealing with car salesmen and going to the dealership. It's a hassle. And people don't like to haggle with the dealer. So it makes sense as a model, as an easy thing to do. In the pandemic, it made a huge amount of sense there. Get the car online. It comes to you. You don't have to go anywhere. You don't have to take public transportation. But as we know, this costs a lot of money. Costs money to recondition cars, costs money to acquire them and then actually deliver them. So the question is, does this model work? And I think for some companies like AutoNation and CarMax, it does because they have their physical property to do servicing and also sales there too. So maybe it's a hybrid model, but like online only, I think it could work, but right now it's not working.
So one of the things that we talked about that acquisition, that $2 billion acquisition, that was an existing auction company that has physical locations. So they did buy some real estate that they could have that they are using for vehicle reconditioning and things like that. The timing was just bad.
And they used debt. They got over 10% bonds for this. It was like insane when they could have sold their stock that was so highly priced.
So then what is the best case scenario then for Carvana looking out to the future in terms of what analysts think should be or will be done to maybe hopefully turn this company around?
So it needs to solve its cash flow problem, which means get costs under control. However you have to do that. And, some of the analysts pointed out to me, there are a lot of things you can do to get cash here, cash there. One thing that has not happened yet is one of the founders, which Eddie Garcia II, who's the father rather than the son, Eddie III. He has not apparently put any additional money of his own in, which he could possibly do. So there are ways for Carvana to get through without declaring bankruptcy or having to go through a restructuring that severe. They just need to get the cash flow under control and it probably would help a lot too if we just got back to a normal car selling cycle and without interest rates suddenly.
Let me ask you about that.
Out of business.
In real estate, we saw Zillow in the early stage of the pandemic have some trouble with its proprietary model where it was buying houses and then flipping them itself. So taking on, a huge part of that consumer cycle. I see this as kind of a very similar situation with Carvana. They were taking on a larger piece of the pie here, but maybe the numbers were inflated because it was a pandemic and people didn't care about the buying price and the selling price so much.
I spoke to a local guy in Jersey who actually had a dealer that bought and sold cars, said that Carvana is paying $5,000 to $10,000 more per car than he was offering.
There you go.
And then it finally flipped over, and now they're going way below Manheim and all the other kind of price aggregators.
So an analyst will tell you that this company only thinks about growth. So this was a high-flying growth stock. that did fly high when things were going well. And we all know the model, which is you spend as much money as you can to get as much market share as you can. I mean, look at Tesla. It took Tesla 15 years after it went public to actually turn its first annual profit. And Carvana was just going along spending money, and they just got into more trouble at this point than some growth companies do. But we also know that some growth companies flame out because they just go too far too fast. Yeah. And whatever happens, the market turns or the idea doesn't pan out or something like that, and it turns out that old-fashioned corporate fiscal discipline might have been appropriate instead of just go as fast as you can on every front.
And they certainly did. They went on a very large spending spree.
I hope they make it.
I hope they make it too. It's a smart idea, and it makes a lot of sense. I hated going into the dealership and buying a car. I much rather would have done it online. Maybe I should have done it on Carvana. All right, Rick Newman, Pras, Subramanian, thanks so much for your coverage of Yahoo Finance's worst company of the year. And of course, we have a number of articles on that coverage from Pras and from Rick on yahoofinance.com.